So that number on the screen right now, that is how much more the average buyer pays over the life of their mortgage when they understand one thing about their credit score. Not the score itself, one specific thing and how it actually works. And the worst part, their lender never told them because most lenders never discuss this. I'm going to tell you right now. If you've been checking your score every week, stressing when it drops 3 points, waiting until you hit some magic number before you even talk to a lender, and I understand that. It makes perfect sense. You were told that the score is everything when getting a mortgage. But the buyers who move fastest and pay the least amount of money, they're not the ones with the highest credit scores. They're the ones who understand these 4 things and acted on them before they actually applied for the mortgage. So stay with me. This video will change how you approach your credit. So my name is Eric Hamilton. I'm a branch manager and senior VP of mortgage lending with Rate. I've been doing mortgages for over 20 years. This channel, Apply with Eric, and what we do here is simple. We give buyers the real information, not the version lenders use to keep you dependent on them, the version that actually puts money back in your pocket. If you're planning to buy a home in the next 6 to 12 months, subscribing to this channel is probably the most valuable thing you can do right now. New strategy every week, it's free, there's no pitch, and just what works to buy a home. Now, let me give you the 4 things about credit that most buyers get wrong and show you exactly what to do with each one of them. So let's start here because this is the biggest misconception. Most buyers think they need a 700 or higher score before they can even apply for a mortgage. That number comes from somewhere, but it's not the actual requirement. Here are the real minimums. Conventional loans typically need a minimum credit score of 620 for most lenders. That is a standard program that most buyers use. An FHA loan, 580 with a 3.5% down payment, and as low as 500 if you can put up to 10% down. This is a federal government-backed program specifically designed to help borrowers with lower credit scores. VA loans have no official minimum credit score. If you have served in the military, this may be your single best mortgage product in existence. 0 down, no monthly mortgage insurance, and flexible credit requirements. A USDA loan for eligible areas. Flexible requirements, 0 down, built for suburban and rural buyers. The floor to potentially buy a home is 500, not 700. The 700 number that lives in your head came from somewhere, but it did not come from the actual programs. Now, let me show you where that $54,000 comes from. On a $400,000 home with a 30-year fixed mortgage, here is what a different credit score tiers actually mean in dollars. A buyer with a 620 credit score might get a rate around 7.5%. Their monthly principal and interest payment is roughly $2,797. A buyer with a 760 credit score might get a rate around 6.75, and their monthly payment is roughly $2,594. That is $203 difference per month in over 30 years. That is $73 in total interest paid. So think about that, $73,000. Not because the 620 buyer is a bad person, not because they are irresponsible, simply because nobody sat down with them and showed them what moving their score 140 points actually meant in real money in a monthly payment. Your credit score is not just a number, it is a price tag on your mortgage. And most buyers do not know what price tag they are carrying. The good news, that price tag is adjustable. And we're gonna walk you through exactly how to adjust it right now. Now I'm gonna show you something most people spend years figuring out on their own. How your score is actually built and where 90% of the opportunity is actually hiding today. So your credit score is built from 5 categories. And once you see the breakdown, you will immediately know where to focus your time and energy. 35% is your payment history. Did you pay your bills on time? This is the single biggest factor. One missed payment can drop your score 50 to 100 points overnight. On-time payments will rebuild it steadily over time. 30% is credit utilization. How much of your available credit limit are you using? If your credit card is $10,000, has a limit of $10,000, and you carry a $7,000 balance, you are at 70% utilization. Lenders see that as a red flag. Getting below the 30% mark can move your score very, very fast. Below 10% can be even better. 15% of your credit is length of credit history. The older your account is, the better. That is why you should never close an old credit card before applying for a mortgage. Closing that credit card shortens your history and hurts your actual credit score. 10% is new credit. Every time you apply for a new credit card or a loan, it creates an inquiry on your credit report. And multiple inquiries in a short period could signal or create financial stress for you, and lenders view this as a red flag. Do not open anything new in the months before you apply. 10% of your credit is actually credit mix. Having a credit card and an installment loan like a car payment is healthier than having only one type of open credit account. So 35% payment history, 30% utilization, those two categories together are 65% of your entire score. That is where the game is won and lost for most buyers. Here are the 4 moves that our team walks every buyer through before they apply. Number 1, pay down credit card balances. This is the fastest lever most people have. Utilization updates every single month. So when your statement closes, if you can have your balances below the 30% of your credit card limit, your score can respond within 30 to 45 days. That is not theory. I have watched buyers move their score 40 points in 6 weeks just by doing this one thing. Move number 2 is ask your lender about a rapid rescore. If you have already paid down a balance or made a positive change to your file, you do not have to wait 45 days for the bureaus to update. A rapid rescore is a process your lender can run that refreshes your credit profile in just a few business days. This is not something you can do yourself, but a good loan officer can do it for you. We use this regularly for clients who need to move fast, and we want them to get the best rate possible. Move number 3, do not close old accounts. I know the instinct is to clean things up, but closing an old credit card before a mortgage application removes that card's credit limit from your utilization calculation and cuts your history length. Both could hurt your credit score. Leave old accounts open and leave them alone. Move number 4, do not open new credit. No new cards, no car loans, no buy now, pay later accounts, no co-signing for anyone. Every new application creates an inquiry and lowers the average age of your accounts. From the moment you start thinking about buying until the day you close, no new credit, 0. You would be shocked how many people do this by mistake in the body of a transaction where it affects them either from debt to income or credit score. So real quick, what is the one thing holding you back right now from buying now? Drop it in the comments. I read every single one and respond to you directly because I guarantee whatever you are dealing with, someone else in this community is dealing with the exact same thing. Now let me give you the 4 mistakes I see buyers make right before they apply that drops their score at exactly the wrong moment. Mistake number 1, buying a car. This happens consistently. Buyers get pre-approved, they start looking at homes, and then also trade in their vehicle. A new car loan creates an inquiry and adds a new account. And increases monthly debt. All 3 damage the mortgage application. We have also seen where the dealer will pull their credit multiple times to shop their credit. This all brings down the score and should be avoided when buying a home. Mistake number 2 is paying off old collection accounts without asking your lender first. This one shocks people because paying a collection account can sometimes temporarily lower your score by reactivating the account in the system. Always talk to your loan officer before paying anything off during the mortgage process. Mistake number 3 is missing one payment because life got busy. It sounds crazy, but one late payment reported to the credit bureaus can drop your score 50 to 100 points. Make sure you set up auto pay on every account for at least the minimum due. Do that today so you avoid any surprises later. Mistake number 4, maxing out a card on a new furniture or appliances because you are already planning to move. You have not bought the house yet. Your lender is going to pull your credit again close to closing, and new balance spikes can change your rate or kill the loan entirely. Every single one of these is avoidable, and every single one of them happens. In my 20 years, I have seen everything, and you never want to ruin your transaction by doing one of these mistakes throughout the process. So here's exactly what the process looks like when you work with us. Before you start shopping, before you write a single offer, we will look at your complete credit picture. Not just the score, what is actually driving it? What is hurting it? What specific moves can we make in the next 30 to 60 days that could give you a better rate once you close? Sometimes the answer is you are ready right now and we can go ahead. Sometimes the answer is if we do these 2 things first, we can get your rate a 1/4 point lower, which is worth $18,000 over the life of the loan. And if we do these two things together before you start looking, that can be a complete game changer. What is great is our gateless system clears your full file in real time, so you know exactly your purchase power immediately. Not an estimate, the real number. Our operations team works through the process and makes sure nothing falls through the cracks. My team is going to go through everything to avoid any issues. Credit is just one piece of the puzzle. The credit conversation is not a box we check. It is where the strategy starts, because the rate you walk into closing, which is decided months before, you never find the house. That is a difference between a transactional mortgage experience and a strategic one. And it is what every client who works with us gets from day one. Your credit score is not a wall. It is a dial. And if you know how it works, we can move it. The buyers who get the best rates right now are the ones who didn't get lucky with good credit. They're the ones who understood the system and made deliberate moves before they applied for a mortgage. If you want to know exactly where your file stands and what moves to make before you apply, the link is in the description. It takes minutes to get started. We actually use a soft credit pull, so there's no impact to your credit score. And if you know someone who's been sitting on the sidelines waiting for their score to be perfect, share this video with them. That $54,000 number at the beginning is real, and they deserve to know it. I will see you on the next video.